guys, welcome to Betzy YouTube channel where we talk about raising capital, investing with purpose. I'm your host, Kalisha, and I have my gorgeous host, Betzy. What's going on, girl?
Hey, everyone. We're just so excited to be here with our special guest today. I know you guys can read it on the title, so you know who it is, but we're very, very excited to have him on today and just getting to talk to you guys another day.
Yeah. Just remember, guys, we're creating a space for bringing experts to share their stories, how they are raising capital, investing with purpose. We want to just do a huge shout out to all our followers, all our subscribers. Thank you guys so much for even sharing our different episodes on social media. We really appreciate it. For all our listeners, don't forget to leave us a review, guys, on Apple Podcasts, Spotify, wherever you listen to your podcast, and share it with a friend as well that you think this might be valuable.
Yeah,
So
we really appreciate it. We see all of the stuff that you guys post, all our comments. We try to be as responsive as we can. We just want to make sure that you guys know that we do care. We really do want to be part of your growth too. So definitely anything that we can do. Before we start, let's do the disclaimer for our audience here. The following information is for educational purposes only. Please do your own diligence. We do not provide financial, legal, or professional advice. Everything that we say here, everything that we talked about is case by case, our experience, and please talk to a professional. If you do need one, we have them on the show. So come on when we're live and ask them questions.
Yeah, so let's dive right in. We want to let's welcome Jaime Thunder Meyer. What's going on, Jaime?
Hey, not much. How's it going, ladies?
Not bad. We're so excited to have you on our show.
Thank you.
You're doing great things. We met Jaime through Amy Major Raising Private Money Mastermind. He's been phenomenal. And when you heard his story of how he's raising capital and investing with purpose, you're like, okay, we got to share this with our audience. So just trying to bring value. Before we even dive in, like, tell us a little bit more about Jaime, like a quick story and how you got started into real estate investing and raising capital.
Yeah, so I started about 3 years ago, actually 3 years ago, just a little over 3 years ago. And it started as I gotten into Fortune Builders, which they have like a 1-day thing. They get you like talk about real estate, and then it goes to a 2-day, and then it goes to a 3-day, and that's where you sign up, basically that 3-day. And so that's where I went to all three of it, and I ended up signing up with Fortune Builders. And if you don't know Fortune Builders, it's basically real estate from A to Z, all kinds of stuff. And there's obviously, we all know that you can go multiple directions in real estate. And so when I first started, I went on the flipping side of things. And so here in Minnesota and up in the Twin Cities area, I got into there's a really high end area in the Twin Cities that I got into and I kind of loved. And so we ended up finding our first deal in that area, and then it started from there. And 4 deals later, here I am. And so like I said, I love real estate. And after I got into it, and I love helping people out is the main thing, is the key thing of trying to help not only help, but help them grow their accounts by, like you said, be investors. So
yeah.
And in that time, that's where I met Amy and got in. I was one of her first persons to join her RPM group. I was met her in Fortune Builders, and then she left Fortune Builders, and then she reached out to me after she left because of confidentially she couldn't grab her students while in there. So we, like I said, then connected afterwards, and now, like you said, that's where I've met call you. So yeah.
Oh, I love it. What make?
Yeah.
Oh, you're go, go, girl.
Go ahead.
What was that question?
What was that question, Betsy? Now she's like
Hey,
sipping on. I was gonna ask you, Jamie, like, what made you start focusing on raising capital?
well, like Amy says, we don't have to use our money for the deals. Instead of using all your money, use somebody else's money by giving them the opportunity to invest and like I said, grow their account. And the same time helping us, and we all basically it's a win-win situation for all of us. So yeah,
Yeah.
I started like you said, that very first flip. I had my business partner, her family member, was our first one with the 30, where they ended up doing 30K, and then it went from there to our next deal. And that's where basically, again, social media helps all of us putting ourselves out there. Nobody knows us. And so I was putting myself out there in that meantime. And again, now another fortune builder saw me and said, "Hey, I would like to be a private investor." And he ended up doing 180K on our next flip. So like I said, then it went from there, and now I'm like I said, once we get those people on board, then they want to stay and they want to continue growing their accounts. So now he's still with me to this day, and he's on for our multi 4 unit deal that we have going out in Washington D.C. He's on that part of on that. So like you said, we try to keep them people stay, and keep growing their account along with us.
Yeah. That 30K, for that first K, what did you say to that lender? Like, how was that conversation? Like, was it like, hey, I'm looking for a private money lender? Talk about that approach, how you got the person to commit to 30K.
So like I said, it was my business partner, family member, and like I said, we just approached them and said, "Hey, this is what we're doing. This is an opportunity," and we offered them 10% on their 30K, and next thing you know, they grew, and now they're not on anything at this point, right at the moment, but they ended up getting into our third deal. With some more, with extra, they wanted more, or they threw out more actually, and so they threw out 50K now, and so like you said, people like to grow their account. They like to see that money grow. So they, like I said, though, so that's how it, like I said, basic too. It's just like how we just tell them there's opportunity here for you to grow your account, and again, it's backed up by real estate. So if something would happen to us, you're always going to get that return back, because there's that house that we can finish up and get your money back.
You said something key just to where you mentioned opportunity. And I've learned that a lot from Amy, that we're providing an opportunity.
Yeah.
You're bringing value to that lender, because if you don't even bring that opportunity, their money will just be sitting there.
Yep.
They're not earning double-digit returns or anything like that. It's just there. So you're presenting an opportunity for the lender so they can make them on their money. Betty, I know you had a question for Jamie that you're super excited to ask him.
Super excited. No, I know that you're in the multifamily space, and I was wondering how raising capital from the single family and flips that you said you were doing, how did that change from doing single family to now multifamily?
Not really much changed, as in the raising side of things. I mean, again, now multifamily is a bigger animal, so there's more money to be raised for opportunities, and so nothing on that really aspect. But the thing with multifamily people where they don't understand so much is multifamily is now a longer investment. It's not like a flip, you got basically could go from, whatever, let's say 3 months to a year, their investment. Now multifamily is, most of the time up to 5 years. And so some people are kind of like, nervous about the whole 5 years being, but then, they also get quarterly payments, throughout that 5 years. So it's not like they're put their money in there and then they're not getting anything until the 5 years. But no, they're getting money and quarterly, and then at the end, then they get a big lump sum.
And what made you get into multifamily? What was that thing that was like, yeah, I want to do multifamily?
It was more. I was looking more as the passive side of things. Like you said, there's like you said, there's Airbnb rent, short-term rentals, stuff like that for the passive side, and I like the multi-family side of things more on that passive side. So, because I was looking more at like, if a person can gain like, say 100 doors, I mean that can, set you for life, for just that payment. And so that's where I was kind of like, I wanted to go like basically go big or go home, so that's kind of how I looked at it. It's like, let's go big. And
Yeah.
I mean, it's slow. I mean, don't get me wrong, it's a slower process with multifamily. And like our first one was a four unit that we're flipping, and now that turned into more of a headache now because we had two renters in there that weren't paying right away, or they didn't say they were paying and then they stopped paying. And so now we're trying to get them kicked out of there so we can finish the deal. And because we got two that are fully finished, and now we want to get these two out of there. And so that's been a process now. That doesn't happen overnight, getting somebody eliminated. So we're finally getting them eliminated so we can finish that deal up, and then basically we're going to sell that one. We already have a buyer that we already arranged. The buyer actually wanted it right away, so we already have a buyer for that. And then we also got we're closing on a 6 unit. That's I ended up raising 380 for that one, for investor that jumped in on that.
So what would you say is the appeal for multifamily, since it does take longer?
What's that?
What's the appeal for investors that want to invest with you in the multifamily?
Well, like you said, it's great returns. I mean, we are always trying to give them great opportunities, like you said, back to these opportunities to grow. And then we have been giving up a little bit more percent wise to attract investors, and so they can trust us. And so we started that, at first we didn't, and now we're like, we're finding a little bit more excess by giving more percent on the deal. So, yeah.
Are you giving them equity too?
It depends on the deal. Yeah, we are. Yep.
Mm-hmm. My question is like, when doing raising capital for the family, persons would hear multifamily, right? And they think when they hear raising capital for multifamily, they start thinking about SEC guidelines and a whole different ballpark. How do you differentiate like raising capital for the 4 unit or the 6 unit? How do you know, like, I may need to go through SEC and do a PPM, or I can just do a secured loan? How do you determine that?
Well, we just recommend them starting another LLC. Like we had a couple of them now. We just have them start an LLC that they put that, basically that money comes out of that LLC for the deal. We found that the easiest, I guess we want to say. Like you said, the SEC rules, I'm really green with that. My partner knows a lot more than that, so I rely on him that on that side of things, because that's not my cup of tea. You know, I live on other. I just, like you said, I just have to. He just tells me what do we got to follow. So I'm more on the contractor side, taking care of the contractors and stuff. So him and I work really well together, because he does the financing side of things, and then I'm on the construction side of things, and helping that part of it.
Are you flipping your multi-families?
Yes, our 4 unit we are. Otherwise, no, the other ones we're buying and holding. Like, no, the 6 unit we're gonna buy and hold. We have 39 unit we're trying to close on. And then that's at this point, and another 6 units. So we have 2 6 units, a 39 unit that we're closing on.
And all these you're using private capital to get in.
Yep.
The ones that you're doing a buy and hold and you're using private capital, are you doing like interest only payments on those? Or are you doing equity?
Nope. Those the 6 units are interest only. The 39 unit, we're offering actually extra equity on that one to get, and we actually, somebody just came forward and said that they are very interested. So in the meantime, we're talking to them and seeing what kind of funds they have that they want to throw at it.
Do you gather more than one private money lender for a specific project?
What's that?
Is it more than one person lending on your projects?
Yes, there can be multiple. The thing with multifamily too is obviously we have multiple people, because can be, like you said, 380. That, granted, that was one in a private investor, but we like our 4 unit, we have 3 people at 50K each that are on that one. Like you said, it's just structuring things and making sure everybody's on, and that everything's all aligned and they're on the deal. So
can you give us an example of one that you've structured recently that you said, "Oh, this is pretty creative," or just something recent?
I guess I don't. I mean, the 4 unit was pretty unique. Like you said, we got 3 of them on there that went in at 50K each. And I guess, like you said, that they're all getting 12% on their return. We gave them a couple of them, 2 of them. We gave them basically 2 points. Let's say 2 points. There was 2 points with the 12% or to get on the deal.
And then with that, I know you mentioned that when you have multiple like that, and which is this way to structure the LLC. Do you let that lender, do you go to that lender and say, "Hey, you create an LLC," or do you create that before them?
Yeah.
We created. That's, again, like I said, that's my business partner. He does that side of thing. But yes, we can create it, but the other person decided they wanted to create it. Her and a gal and her friend created it, and so they, like I said, we give them the opportunity. We can create it for them, or they can do it themselves, and they decided to go with themselves on that LLC.
So they'll do the LLC together, all the lenders.
Yep.
Okay.
So
that they're all. You usually have them in second position.
Yes. Yep.
So for those who are still a little bit confused, here's what we're talking about: structuring deals on the back end. So Jamie had this 4-plex and he has multiple lenders, and you can correct me if I miss anything out, Jamie. He has multiple lenders for that 4 unit, and what he does, instead of doing second, third, fourth, fifth lien positions, all lenders just come together. They create an entity, and now that entity with the lenders will now be in second lien because they're now lending the money, right, Jamie?
Yep, exactly right, correct. Yep.
And then he gave the option, so he also offered where he can create the entity for the lenders, but the lenders wanted to create an entity for themselves. So there's no right or wrong way to do it. guys. Like it just depends, whatever is easy. Sometimes if the lender is completely new to real estate, new to business or lending, investing, whatever it is, and if you're on a time crunch, you guys can create the entity. Like, hey, can you just give me all the info? I'll coordinate and create the entity. But if that lender is diverse and they know what they're doing, they can always create that entity for themselves as well. Um, Jamie, what would be some things for anyone looking to raise capital for multifamily or single family? What are some factors do you think they should consider when raising capital?
I'm trying to think. I guess, the big one is, like you said, people gotta realize with multifamily it's long term, because we had to deal with that right off the get go with somebody they thought it was going to be a short term thing, and we're like, no, multifamily is a long term thing. Like you got to think of it more of a long term thing, a process, and like you said, most of the time it's 5 years, and then we, like you said, refi out, and then we pay them out, and then we keep renting it out, and we pocket the rest. So, but that's the key thing that I've been noticing when I'm raising private money is people don't quite understand that part. Like, oh, they think it's going to be, oh, we'll get all our money in a year, and then that's not true. Like you said, it's more, they got to think more long term with that in multifamily.
Is that a trend that you've been seeing more often right now?
Yes.
That people are like more short term, they want their money in and out quickly.
Yeah. Yes.
What
And
are you
that's
doing to educate them?
Well, that's the tough part right now, because everybody, the economy, everybody's scared of the economy, and so that's why you said like you said, we have noticed that people want to do more short term just because they don't know what it's going to be like in a year. It's hard to get people to think differently. I mean, but like you said, in the end, so we've been finding, okay, so if they don't want to go long term, then we're just thinking, okay, let's find something else to put their money in. And actually, we just it actually came on my business side, because he's on the financing side of things, and he always gets people or gets weird things. And so we actually had a hedge fund come to us now, or come to him, and then, like you said, to us now. And so now, what we're doing is the people that want long or short term, we're gonna throw them into this hedge fund deals, like so. And again, that's where we're giving out more equity, so we can get more people to invest. Like, like we have one going in Georgia, that's 70K. Whoever bringing 70K to the table, then they're getting, I believe 40% on that one.
Wow.
Right.
So
I'm curious. Break that down for us. Is if you're partnering with a hedge fund and that lender with 70, how does that work?
So okay, so they're gonna say, okay, so with 70K, they're bringing 70K. Now hedge funds is you have to hold on to it for a minimum of 60 days, and so and then after 60 days, they will buy it from you, and they give you right out front. They give you the what they'll pay for the property. Then that way you can run your numbers and say, okay, this one we can make up to this much. We're trying to do a minimum of at least between. We're low as 50, but we're trying to go from like about 75-ish to 100 on the deal, making on the deal. And so, like, say that one was 70K. Now that we giving out that 40, they're going to make roughly, I think it was 28K on just over 2 months, 3 months, basically.
Ah, that makes sense. Okay,
Yeah.
that makes
Yep.
sense. Smart.
So that's pretty good. Like you said, that's a pretty good return for somebody, you know what I'm saying, on 70K. That's really good turn. Yeah, you know what I'm saying? Like, and we're finding out, and not being so greedy, because again, at the end of the day, let's not be greedy. Let's give more out equity, and we can get more deals too, like we, so now he found 11 of them out in California that we're going to that we might have found now a lender that's going to bring $1 million for all 11 of those, and he's going to get a rate. I don't remember the numbers yet, but he's going to get a great return on $1 million on 11 flips, basically. I mean, basically that's what it is. It's 11 flips. I
mean, and it's California, so.
Yeah, in California, right? Too.
California doing a fix and flip, honey. That is where I see a lot of persons. The fact that you brought up the whole thing with the hedge fund and the PML, how you utilize those what do you call it, money teams, basically. Because it's rumors. First, we'll just hear like a hedge fund, they will buy all these big developments, but no one really gets in to the nitty-gritty of how they purchase the property and then bring it to the hedge fund buyers, or which is very common as well. Wholesalers will find those properties and just bring it to the hedge fund buyers, and then the hedge fund buyers will just take care of everything. I like the twist that you do with it. You find the property, then you use PML to get into it, and then sell it to the hedge fund buyer. So again, also another zero out of pocket type of scenario as well, which is amazing.
Yeah, and the other thing too, we always think, and you'd say the same thing. So you always have to have plan B. We always think of plan B. Okay, so our plan B is on all of these is, okay, we'll get into them, and then we can basically, what we're going to try to do is sell them right away. We're actually going to try to sell them. We're going to put them on the market quick before we get to actually give them to Zillow or sell them to Zillow, or not Zillow, but the hedge fund. But, so whatever comes first, if we can sell it before and get that same amount, then we're going to sell it. If not, then the hedge fund takes it over in 60 days. So like you said, big thing is, I mean, both of you agree that you always got to have plan B, just in case, because the thing with hedge funds, it's not a guarantee. That's the thing is you got to watch with them. It's not a guarantee that they're going to buy that property at you after the 60 days.
And that's a lot, but we're seeing that a lot where a person will send us deals to buy, and which is mostly creative deals, and they just have one exit. For us, if we're using private money, we need to have 2 strong exit, because then when we're going to our lenders, we're like, hey, if plan A doesn't work, we have plan B. Because at the end of the day, they want to make sure if I lend you this money, I'm getting it back.
You can have that buffer to be able to pay them back.
Yeah. Yep.
So
exactly.
They don't
As I said, we always got to have 2 exit plans just for the sake of being made sure.
How do you, before we wrap up, I want to ask you, how do you navigate some of the challenges? I know you touched on it a little bit. If you can go deeper into some of the challenges that you are experiencing now with raising capital, how do you overcome some of the challenges? I know you mentioned one of them where persons wanted short-term lending because of the market. Are there any other challenges that you're seeing happening, and how do you navigate that?
Like you said, I guess the main one is, like you said, people are looking at more short-term at this point. And the second one is basically educating. We got to educate people of that they can get a better return than the stock market, at this point, stock market, or even, like you said, if their savings account, checking account. I mean, right now, if you put $1 million in a savings account and then a year from now, that's going to be $900K. Really, you're going to lose money by sitting in a savings account. And so the big thing now my thing is that we got to educate people. We have to educate people so they understand, especially now with this economy so tight, and we're going to lose all this money. And so let's say, because the inflation has gone terrible. And so, like you said, I mean, so that's my big key thing is just, I can't, like I said, we can't educate them enough. It's just, and it's just weird, it's just strange. Like I said, we've all been brought up differently, but most of our families were save, and put it away. And then, I was just listening to a podcast the other day, a gal she's 48 years old, and I don't know. I guess take that back. I don't know how old she was, but her dad was save, and then he was 40 years old and he passed away. So now whatever she didn't say the dollar amount, but he just, let's say, like I said, say 500K. Yet he had all saved up. Now he can't. It's gone. Like
Yeah, that
he
and
didn't get the he didn't get the opportunity to enjoy it.
yeah, it's save, and then also pay off all of that. No debt.
Yeah.
Yeah.
Yes.
We're like, please, debt. Like, please
Yeah.
give me debt.
Yeah.
Jamie,
And
how
now
are you?
like I said, I'd rather be broke and have opportunities than have money in my account doing nothing.
Exactly.
How are you finding your lenders, Jamie?
I've, again, back to social media. I mean, if we don't put ourselves out there, nobody knows who we are. Who are you if you don't put yourself out there? And that's the big one is the social media. I've had lately, I've had a really good luck with LinkedIn. For LinkedIn now, again, people, if you don't know, LinkedIn is more of a business side of things. More business people are on that page, so you don't get all the riprap garbage, and I wouldn't say garbage, but more business side of things. Yeah, on that social media. So I just keep mine, like you said, professional, and just basically post the same stuff that I'm posting on Facebook or social or IG or TikTok, and then post it there too.
Now on LinkedIn,
And
are you reaching out?
What's that?
No, you went out, Betzy. That's why.
Yeah, okay. On LinkedIn, are you the one doing the reaching out to other investors, or are they reaching out to you? Is that your question?
Combination of both. I'm reaching out. I try to do at least 25 a week, if not more. I just send out a message to just go up and, like, say, nurses or doctors or lawyers, and just send them a private message, just simple, just short and sweet, like, hey, I'm a real estate investor, got opportunities. You can earn double digits return backed by secure, right? And basically just leave it at that. If they interested, then they reply back. If not, we move on. And I just said, like I said, it's a connection. I just said, yeah, we leave it as a connection. So.
Oh, I love it. That was my question.
Yeah, just like I said, we can't be afraid to reach out to people. That's the big thing. And like you said, back to, we got to educate them. I mean, key thing is educate. Like, and then back to, like you said, Amy's group, RPM. That's what we're there for, is to educate people how to invest their money.
Yes, we want debt, but we also want the debt to be profitable.
Yeah. Well, we want, like you said, again, back to financial freedom. We want financial freedom. I mean, so we can all go on vacation together, or buy
private money lenders, right?
Yeah.
But Jamie, like, thank you so much for being on our show and just sharing how you're raising capital and investing with purpose. Drop so many valuable insights on how you're running your business and how you're raising capital for your business. This has been great.
Awesome.
It's been awesome with you too. I love it.
Here, like a couple months, to bring it back on the show, and just the growth that we're expecting to see.
Yeah,
it's all about growth.
Right. That's awesome. I'd love to do that. Like you said, let's go whatever, a year from now or 6 months, whatever. Yeah, just so we know. Yeah, so we know where. I love it. I love it.
Our growth to grow together.
Yes, we're here to grow together. Exactly.
Guys, so the best way, if you want to reach out to Jamie, if you have any questions, his handle is in the description, but you can also follow him at Thunder Meyer. That's THUNDERMEYER. And of course, you can follow myself at Kalisha Carter and Betzy at _life with Betzy on Instagram. If you guys have any questions, want to stay in touch, be sure to follow us, like this episode, comment, let us know what you guys think. And we're just so happy to be having this space and sharing what we're learning with a bunch of like experts, sharing their insights. Until next time, guys, thank you for tuning in.